And if you're an investor and you've been sitting on the sidelines for a long time, you should have already been getting ready, listening to our two channels and just preparing
Yeah.
yourself, not going through the whims of the ups and downs of the news cycle anyway, but you should definitely be getting ready. And how do you get ready? You might say, well, I don't have enough down payment either. Like the rent to price ratios aren't working either. Well, you have to do what Michael and I talk about is you have to make offers that work.
Redfin is reporting that the housing market is dead. The housing market is dead right in the spring selling season because home buyer demand has collapsed. I wanted to share this headline, dig into the details with the one and only Coach Carson, and really ask, what does all of this mean? What does this mean to home buyers, home sellers, but frankly, most importantly, investors? So, Chad, welcome to the show. The housing market is dead, according to Redfin. What do you make of all that?
Well, thanks for having me. I think I need to unpack that a little bit. Like, so what's the main stat that they're showing? That is it the number of buyers making offers? Is it the time on the market? I'm just, anytime you hear a big headline, you got to get to like, what's the data here? And you're the data guy, so tell me about this.
Yeah, so it's really a combination of factors. First and foremost, inventory is growing across the country. Inventory today is up 33% year on year. In fact, active inventory went up 2% week on week. So pretty significant move higher. When you break down the number of new contracts, which is, new listing agreements, it's really not that much more than years gone by. So what is happening to see this inventory explode, days on market explode, is demand has fallen off a cliff. So again, we are seeing maybe slightly above trend number of sellers. What we are seeing significantly below trend today is buyers. And as you know, for much of the country, we were smack dab in the middle of spring selling season. The level of uncertainty, home prices, rates, fear of job losses is just causing the home buyers to stay put. Hence, the market is dead.
Yeah, got it. Okay. Well, I mean, I'm not surprised that if there's a decrease in demand from overall buyers, I mean, you think about just the squeezes that buyers are having in general, like residential buy a house buyers, the interest rates being high for a while. That's not a new story, but it doesn't make it less affordable. The, just uncertainty on the market, how's the economy going? Like, so I'm not surprised by that. From an investor standpoint, I just I started in 2003. And so I just have a memory of all these different markets I've gone through since then.
Yeah.
And this is, when people tell me the inventory, the days on market has gone up 33% or whatever that number is, I say, so what? Like that, like, I mean, it was like 7 days on the market back a year or two ago. And to me, a normal market that I saw for like decades was 30, 60, 90 days on the market.
Yeah.
So, and then I experienced 2008 and 9 when things would sit on the market for a super long time. So I guess just first and foremost, I think perspective, you got to have a little perspective here. It is an interesting change. It is interesting that buyers are being squeezed, I think, but from an investor standpoint, I see opportunity in that. And I've actually personally been making more offers, partly just because we've had some cash on the sidelines and we're going to put it into play. But when I see longer days on the market, I see investors are a solution that sellers need. If seller wants to get rid of a house, I'm a buyer and I'm a cash buyer and I know my market well and I can go quickly. So there's a ton of value investors add to markets when they go through these swings. We kind of fill in gaps that regular buyers might not be able to do.
This is exactly the conversation I anticipated us having. And again, like you, I started doing this in 2001. I've studied real estate and economy all the way back to 1970 in a lot of detail. And what we're seeing right now, folks, is a transition from perhaps the hottest sellers market I've ever seen, 2021, 22, to frankly just a normal buyer's market. Now, this is not true across the country yet. We are seeing more and more markets go to a buyer's market. But frankly, when I think about what's going on today and the fact that Redfin said the housing market is dead and buyers are revolting, I'm like, good. I mean, because as an investor, it's really simple. What do I want? I want more choices. So more inventory up 33% year on year, 2% week on week. Good. I want less competition. I don't know about you, but when I write an offer on something, I want to be the only game in town. So I do want less competition. And then finally, and this is like the cherry on top of the sundae, is I want more motivated sellers. And motivated sellers really don't start to raise their hand until days on market get like 60 plus.
Yeah.
So the fact that Redfin is reporting this, and I feel bad, right? First-time home buyers make up roughly 24% of the market today. It should be 40, right? The housing market is clearly broken. We have had a lot of uncertainty because of tariffs, thoughts of a recession, job layoffs. All of these things are scary, and that's keeping buyers on the sidelines, right? So the spring selling season is going to be a dud. But for us investors who do the work, who have financial discipline, who have the ability to write multiple offers, different types, cash, seller financing, creative, buyers markets are awesome. So I can't help but smile a little bit when I see these headlines from Redfin.
Yeah, get ready. I mean, if you're an investor and you've been sitting on the sidelines for a long time, you should have already been getting ready, listening to our two channels and just preparing yourself, not going through the whims of the ups and downs of the news cycle anyway, but you should definitely be getting ready. And how do you get ready? You might say, well, I don't have enough down payment either. Like the rent to price ratios aren't working either. Well, you have to do what Michael and I talk about is you have to make offers that work. You know, I made an offer $100,000 below the list price. Nice. It was another investor. It was, it was a fixer-upper property. I think they're being a little unrealistic on price. Basically, what it boiled down to, I look at cap rates. I look at how much the income of this property is a ratio, the net income as a ratio of the price that I'll ultimately have to pay, including all the repairs. And they were asking like a 3 or 4%, cap rate on a fixer-upper property. Like, there might be somebody who would want to do that, who just doesn't know what they're doing, but probably not. So I'm just making an inventory of offers that work for me, and then most of them say no or they ignore it, and then I have a little follow-up file. 30 days later, that property's still in the market. They get another offer, they get another conversation. So that's just the game.
This is the game, folks. I'm so glad he went through that. I'm willing to guess that when you sent out that offer $100K below list price, you did not expect to get a yes answer. You probably didn't even expect to get a counter. But what you did do is you anchored the seller on that price, and you're going to follow up, whether it's 2 weeks or 30 days. That's where the money is made. Only write offers that make sense to you, right? You're the buyer. You make the transaction, right? We have forgotten that sellers don't make the market, right? 21 and 22 sellers made the market. You had a listing, you put it in the market, you had 17 offers, you made the market. Not in buyer's markets. So for years, most of you haven't experienced a buyer's market. Buyer's markets are awesome because we as investors have financial discipline, we have consistency, we know the money is in the follow-up. So I love that you and I have the same exact process. It's just, it's amazing to hear.
Yeah, and I'm having to remind myself to be patient. Actually, I was cutting grass of all things this weekend, and I was listening to the Warren Buffett Berkshire Hathaway annual meeting. It's like 3 hours of just of Warren Buffett just going on and on about it, this and that. But the big takeaway from me listening to him for 3 hours was how patient he is with his money. It just Berkshire's it's a whole other deal. But I study their business, and I own some shares, and it has 330 million. No, Billion. Yeah, I said million's not much money. $330 billion. And he even said that people were asking him, like, why do you have so much cash? Why do you have so much cash? He's like, well, if I had the good investments that I want to buy, I would probably spend it down to 50 billion. So he's got like 6, 8, 10 times more money, more cash than he needs. But he and Charlie Munger used to say that it only takes 5 or 6 investments in their entire lifetime that make most of their money, because they just go, when they see a good investment, they go all in. And on a small scale, I think that's what we have to think about. If we make 10 offers, most of them are going to get rejected. Most of them don't work. But when we get a deal, that deal needs to be good. Like it needs to be good in the sense that you can make money. But what I always tell people, the thing that makes me confident about an offer is not just that I'll make money. I expect to make money. It's that I won't lose money. That it's a deal that I have a safety, a margin of safety, just like Warren Buffett talks about as well. So that's what we have to, like, that's the thing about a buyer's market. It's a little scary because, like, what are you going to do with the market, or the property? This person couldn't sell the property. So are you going to turn around and do the same thing? Well, you got to have a plan to change something about the property, fix it up, or more like you and I do, we just have to have a plan to wait out everybody else through buy and hold simple real estate. And so it goes back to, if you're willing to operate and manage and get income and hold a property over the long run, you can hold through all these ups and downs and storms, and you can take advantage of these soft spots in the market. And it's actually a good thing, just like you said.
Yeah. At the end of the day, the other thing I'm telling people in a buyer's market, for the longest time, I've told people to do the work, figure out what an average deal is. You can think average cap rate with your analysis. And then, for the longest time, it's okay. If average is a 4 cap, you want to do a 5 cap or a 5.5. Why would anybody do an average deal? But what I'm telling people to do in a buyer's market, especially if you're an investor and like you only got one deal to do this year, make it the deal of a lifetime. Make it the deal of a decade. In a buyer's market, you have all of this power. So instead of, getting a 5 cap, go get a 7.5 or something, right? Go get just amazing deal. What does that mean? It probably means you're going to pay a lot less than list price. It might mean you get seller carry. I will tell you an example of somebody in my community just this week. They bought a 6-unit apartment building. They got a 50% mortgage from a bank. They got a 35% mortgage from the seller. So the seller's in second position at 35%. And they came in with 15%. But what I didn't tell you is that 35% is at 0% interest. So think about the blended interest rate. Let's say the first is at 7.5. The second's at 0. So that total debt structure probably makes it a 5%.
Yep.
4.75.
Yep.
This is how you get deals of the lifetime, is you find that motivated seller. You have multiple tools in your tool belt. You can write creative offers, and then you just follow up. What do you think?
Love it. Yeah. I think one of the common things we hear about in the market right now is people have equity. Mm-hmm. Homeowners have equity, investors have equity. So find ways to negotiate with their equity. That's what seller carryback is. That's what being creative with terms. And so if you can make offer, and that's really what I'm thinking a lot about. I'm making a low cash offer to anchor. And if they do that, they do that. That's great. But then, hey, let's talk. Are you motivated? Can I help you solve a problem?
Exactly.
Is this mortgage payment sitting on this vacant house a problem? Well, let's talk about it. Maybe I'll pay off your mortgage, or we'll do some other kind of arrangement. But the mortgage might be 50% of the value of the property, right? That's great.
Yep.
And then maybe I'll give you enough of a down payment to help you get moved, to know that I'm serious.
You went mute. You're on mute, Chad. Sorry. Oh, technology got us. Nope. All right, folks. At the end of the day, Redfin says the housing market is dead. But don't believe the hype. Investors are here. This is your market. This is a buyer's market. Investors, do the work. Guys, thank you so much.